Welcome to the source of commercial real estate, where we talk to the experts in non-residential commercial real estate so you can grow your business, find a competitive advantage, and use real estate to live the life that you want. I am your host, as always, Jonathan Hayek, and today I'm talking with Jason Adams. His company is Signal Ventures, and he is an expert in data. So I am really looking forward to diving into that with Jason today. Jason, how are you doing?
I'm doing really well, thank you.
It's great to have you here. Jason, why don't we get started by you telling us about your background, how you got started in real estate, and what your work looks like today?
Yeah. So I would say I've been a speculative real estate developer for 22 years, straight out of college. So I was literally senior year of college. I bought a book on how to fix up houses and was making offers to buy houses on my spring break with some money I had for about $100,000 my grandma had offered to lend me. So I have been doing it my whole career. I've never really had a normal career job. My mom has been a realtor now for 40 years, and my father has been a CPA tax preparer for 50 years. So I've got some DNA of real estate and accounting, and I see myself as really strong in accounting and understanding the fundamentals of real estate. And so a little bit about my background, what I've done, I spent about 3 or 4 years after college fixing up houses, and then I got into subdivision properties, residential subdivisions. I live in a growing, fast-growing market in Central Oregon, and we had the fastest appreciating single-family home values in 2006 at about 40% annually year over year. And then in 2009, we suffered the heart of the crash. We had the fastest depreciating home values in the country at about 50%. So early in my career, I saw some tremendous volatility in what I thought was supposed to be a stable asset called residential housing. Obviously, we now call this a great financial crisis. But it went for me as borrowing, going to the bank, borrowing $4 or $5 million on basically equity lines of credit, and then selling lots at $230,000 at the bottom of the market. I sold for $37,000. So I was about $800,000 negative net worth in the bottom of the Great Recession. Definitely a bankruptcy candidate, and more importantly, learned a heck of a lot about markets, cash flow. And I was luckily in a place that I grew up, had good relationships, saw long-term opportunity, and said, I want to raise a family here, so I'm going to pay off my debt. So I didn't let anything go back to the bank, worked through one short sale, and got back into the business of fixing up houses. So I spent the next, between 2007 and 2010, 3 or 4 years, buying about one house a month to fix up, either at the courthouse steps or at a short sale or some other foreclosure process. And I was paying back my debt one house at a time, putting food in my bank account to live on, or money in my bank account to buy food and live on, and then pay off my debt. And I had no family at the time, no wife and no kids, so it was all an exercise on my spreadsheet. But I was able to get back to whole, and I got into home building at the very end of this. I bought some new houses that were unfinished, so the builders had walked away, the banks had gotten them, and I went in and finished these new houses. And that is when things started turning around about 2010, and became a home builder, learned production home building the next 10 years, built about 200 single family homes. Thought that was my life's course. And then I realized it was too big of a operation for me, too big of a wheel that I wanted to spin. I started a young family and I wanted to have more flexibility of time. So I sold that business and got a brief stint in the car wash business. And I'll finish off by saying the best thing I've done is build a couple of storage units that I built in 2015 and added on to one in about 2019, and I sold and did well. So I've done a lot of different things over my career. I've seen some great volatility, and I think the challenge that I've embraced is how to follow the numbers. My numbers, the market's numbers, and through different, all the different ways they come at us. And that's my joy in life and business now is being the best number cruncher, or we call data analyst around. So that's my role in the real estate world, or my specialty, should I say.
Jason, what an incredible story. There's so much resilience in the story that you just shared. Take me back to the senior year of college. I'm sure your friends are looking for full-time W-2 jobs. They're interviewing. You, on the other hand, are reading real estate books and are looking to flip houses. Can you sort of describe, take me back there? What was the impetus for wanting to get into real estate at that point?
Well, I read the book Rich Dad Poor Dad. Yeah, a friend of mine recommended it. And I came home. I remember it was actually on Christmas break before I graduated. And I was like, Mom, I figured out what I wanted to be. I want to be an investor. She's like, that's great. You should, but you got to get a job first. Here's some ideas. And I was like, yeah, I don't know. It'd be kind of nice just to start there. So managed that two friends of mine. The only people that understood were some of, I had met some investors through my mom and her business that were at that point in their 60s or so. And I did reach out to about half a dozen of them and said, what's your life been like as an investor? Like, how's this worked out for you? What is this thing like? And I think Rich Dad Poor Dad said, you get more information when you ask someone for their advice than you do for a job. So I did that. And that was a big source of inspiration for me that didn't come from my peer set, my direct peers.
And so now take me back to the great financial crisis, where I think you said you were $800K in debt. Did I hear that correctly?
I had a balance sheet of negative 800. So my equity was negative 800,000. Right? So all my assets less all my debt was negative 800,000.
So your net worth negative 800K. Can you walk me through your mindset at that time? Why? I think if it were me, I would have crawled into a hole and cried. So walk me through your mindset of how'd you dig yourself out of that? You said you didn't have a family at the time, so you were probably able to live pretty lean. But what was your mindset, and how'd you dig yourself out of that hole?
Yeah, well, first of all, luckily interest rates dropped to like 2%, and I had some interest-only lines of credit that I had on some various properties, and it seemed more serviceable. But I think so back to some of these mentors, I had a really strong mentor of mine that lived through a similar cycle in the 80s and said, you know what, this is the times where people really separate themselves. And it seemed like I was separating the wrong way. I feel separate. My friends in college don't have any debt and they seem better off. But he's like, no, the learning you will go through right now will pay off in huge dividends the rest of your life. So think about things like market share, like just keeping your lights on. Like what's your market share? Even though your balance sheet's gone, you're picking up market share because you're still in business. And then I think, there was this for me, a strong desire to raise a family in this community. So I know, like, I'm happy with where I'm at. It's a beautiful place. And so I just had this 20, 30-year view that someday this is going to work out, and I'm going to be, I'm going to keep this vision of entrepreneurship alive for myself and future family. I did a lot of running and cross-country skiing, and I had to keep a lot of oxygen running through my brain. Luckily, I didn't drink a whole lot because I think that sent a lot of people in another direction, but made healthy choices and took the long-term view.
And we're going to get into your love of data and analytics, but I imagine that was part of it, that you're a very analytical thinker. You alluded earlier to you're in the spreadsheets and you saw the numbers and you had the vision of 20 to 30 years down the road. And so you're able to just take the right actions to get it done. And I also love hear you saying that, you love Central Oregon and you saw yourself being there for the next 20 to 30 years and raising your family there. And so if you start giving keys back to banks and start walking away from properties, that reputation follows you. And so, when the great financial crisis is over and you want to go back to those banks for more debt, it probably reflected really well on you that you were a person of integrity when things were really tough, I imagine.
Yes, it's helped me a ton coming out of this to tell people that I've been in worse cases. Now that's a lot of it's lenders. Lenders ask me like, how do you handle things? Well, let me tell you, last time I faced this situation, this is what I did and how I got through it. I haven't worked with much partner money yet at this point, in terms of LPs, but I have a case for how I've handled my money. But I think a lot of it's the vendors, the relationships, the various contractors we've worked with. Certainly the different professionals. There was a lot of people who didn't pay bills. I have one of my major excavators. After this whole thing, I owed him like $60,000. I'm like, I can't pay you now, but I'll pay you someday. He says, okay. And he had like 20 clients going through this, and I was the only one, some 5-10 years later, that paid him back. And he became a great vendor as we started building houses. And actually, right now he's digging a ditch next to my house. Long story, but these relationships are valuable over time, and I recognize that value more than the short-term dollar that I could have squeezed from every one of them.
You hit on a couple lessons that you took away, but any other major lessons or takeaways from, your lowest point after the great financial crisis to your business today?
I think I've heard people say this before, like pessimism people find easier to believe, but optimism is what wins the day. And so I just had to choose optimism. I don't know if I had to, but I did. Looked for every little bit of optimism I could find, with the understanding if I chose pessimism, I was out. I had all the evidence to be done. So I think, going forward, going through COVID, similar sort of thing. Where's the optimism? Where's the opportunity? Where's the green shoots through each of my deals, ventures? I've had a lot of failures for sure, but I've chosen optimism. Like there's something to learn here. And by that knowledge, I will be stronger, better next time. Yeah, I'd say maybe as a story of my life.
Yeah, an incredible takeaway. Thank you for sharing that. So you earlier described yourself as your joy in life is being a data analyst. You're a spreadsheet guy. You love numbers, very analytical. So tell me what your work looks like today. You're an active real estate investor, but you also love data. So tell me where data fits into your life right now.
Great. Well, maybe I always need to qualify this. My wife and 2 kids are my joy, and data falls a close second, or maybe a far second. But when it comes to showing up at work, I think of all the numbers of business and the processes of business, and whether it's your different accounting system or schedules, or we all, I think in our world, deal with pro formas, these financial models. And they all lead to something called like a decision, like, do it or not do it, or raise the price or don't raise the price, or put money in or not. And these decisions are critical to the success of our businesses. And you can think of these decisions as like the right one or wrong one, but you can also think of the timing of our decisions. And so that you can make a good decision, but be late, and it's not as effective as maybe making an okay decision at the right time. And so so it's kind of like, ask myself this question: how do I make good decisions quick? And a lot of it comes down to having the information at hand or the data at hand to make those decisions. And so if I could look at any business, if I could chart any business, I would love to chart the amount of time spent trying to figure out what to do versus the time actually doing it. You could call any person, any investor, any business. And I would say, if you could chart this, the businesses who spend less time trying to figure out what to do and more time doing, over the long haul, are going to be much more successful. And so there is this thing called paralysis by analysis, but I would say that is ineffective analysis or slow analysis. So we are extremely calculated, high analytics, but our goal is to get it through fast. And the fun thing about this too is it takes the decision-making to more people. So a lot of small businesses, I fall in this category. I have 4 employees in my corporate office and me. So we're very small. Most of the time that all the decision we're making goes through the owner. But even to a larger extent, bigger businesses through the higher levels. So I love seeing decision making get pushed down to lower responsibility employees, but not at the cost of the quality of the decision or the timing. So how do I have high quality decision making quickly, at any level of the organization I make? And so that's maybe you could say the mental exercise I'm playing. But what it looks like right now, we're building some ground up self-storage projects. We just made an offer on our first Class B light industrial value add play. So we're looking at properties, we're talking to contractors, we're paying bills, we're renting stuff, and we're selling stuff. But I would like to think our speed to decision making is really fast, and the number of people making decisions, or the number of decisions get made every day, is really high, and the quality is generally good enough.
So, I mean, I can totally empathize with what you're talking about. We are all so overwhelmed with the amount of data that we have access to, and it definitely can, and for many people does, lead to, analysis paralysis. And so what is the solution? Because, for so many people, it can become just that, paralyzing, that it gets so hard to make a decision. We often have competing data sets, whether it's within our own business or, external market data. So what have you found is the solution that has helped you, a very analytical person, make such fast decisions?
Yeah, well, first of all, I think one has to place a lot of value on their data. Now, this is not an accounting exercise we do. This is more of an emotional thing, or a sense of pride. I've heard people say data is the next gold, or it is the gold. So at some level, it's like one has to say either you could say the success I've achieved or the opportunities that will come before me are a function of how I manage my data. There's a point of view or reference that, like, let's just kind of value that, like, that thing, because it costs money. I mean, it does. There's no way around it. A lot of people say, oh, it's too expensive. Well, I say, well, you don't place enough value on it. So you got to place the value on your data. And then there's just some things to do. Right? And the things to do, I think of data, there's ultimately some initial source of data. And then there's this view of the data. And everything in between, ideally we automate. Now you could call this, for a lot of people, great careers, middle management, I don't know, great education, but there's a lot of repetitive data calculations or processing that just aren't necessary anymore. We have in our world the technology to streamline this. So we are always trying to get to the original source of that data and pushing it through to the chart or the view, and having nothing in between. Now that it saves time, saves money, and it also saves a lot of errors. So there's a lot of people that make errors when they're copying and pasting stuff between spreadsheets or building these formulas. And ideally, these automations, it's built once and then it can be run at scale. So we've evolved beyond spreadsheets. We do zero calculations in spreadsheets. We have spreadsheets to collect some data, but that's it. And we're in the process of building software into forms to collect our own data that's unstructured. So I know in real estate, there's a lot of unstructured data, and that's kind of the frontier we're tackling right now.
So a minute ago, you talked about all this, all these repetitive tasks in terms of data. I think about analyzing deals. People get an OM, people are looking on LoopNet or Crexi, or they get a broker email, and they're looking for self-storage, or they're looking for an industrial property. And there are these certain metrics, and it's not rocket science, But at the same time, these are really repetitive tasks in terms of inputting pricing and lease rates and potential vacancy and all those sorts of things. So it's really a matter of how good is your pro forma. And so you had talked about you don't use Excel. And so what are you using? And what do your pro formas look like to be taking these tasks on?
Great. Let me start off answering the last one first, because I think that's what's got to drive this thing. We have dashboards. So we have, these sets of charts and bars, lines with filters that we can do all of our analysis on. And so every lead is on one dashboard, and we have the ability to pick the variables. So like, what if the cap rate's this? What if the unit pricing's that? What if the offer price is this? What if the exit date's that? And then give this information to key things like what are our targets internally for a project level? What are the bank's targets, called a debt service coverage ratio? Or with partners, what's the internal rate of return? So we want to have quick access to those targets. But to pull that off, you do got to get data in an organized fashion. And so we use a platform called Domo, but it's not the only one. Power BI is a Microsoft's version. Tableau is now owned by Salesforce. There's probably others. But the maybe one of the key takeaways to think about here is building a data warehouse. So there's a term called a data warehouse. Another one's called a data lake. I'm not sure what the lake came from. If you're more outdoorsy, you call it a data lake. If you're an industrial investor, you call it a warehouse. But one spot for all your data is the goal. And it's not your accounting system. It's not your scheduling system. It's not your ERP. It's separate. So we have a data warehouse inside of Domo, and we are pulling all that data in automatically wherever it exists. So it's pulling in from our HR system, our accounting system, from some public data sets, our scheduling system. And we actually have a lot of spreadsheets. So I've started off, I'm not a software guy, by the way. Don't confuse me with a really good developer. I know how to build a spreadsheet and hook it up to our data warehouse. I've built databases out of Excel. Right now I've got about 300 operating spreadsheets. It's crazy. It's horrible strategy, but it's kind of bootstraps, cheap and quick. And we're now in the process of replacing those with actual software, like a web form, to give more control or create more controls and less opportunities for them to break. But so we get into a data warehouse to find the data, connect it to the data warehouse. Then there we do all of our transforms. So ETL is a common word. It's called extract, transform, load. But we have these, I think of them as Rubik's Cubes, these processes. The same things you do inside of Excel, we just do it once and across all records, all rows. So with our we call it our income property pro forma right now. We have defined, I think, 13 variables from, like I said before. We've got acquisition finance, construction finance, long-term finance, purchase price, what we call our job cost of renovation, our pricing, operating expense plans, equity structure, waterfall plans. We even have the ability to do multiple operators. We've got 13 different variables that are being run through these calculations. And so most people, in my experience with Excel, they start building tabs, and they've kind of got this one or two variables they're working on, and they'll get 3 or 4, 5, 6, 8 tabs. And at some point they go, stop, don't give me any more variables. It's good enough. We'll run with this. We don't do that. I want variables to come in and then to just kind of deal with them. So like for us on a typical deal right now, and it's not even our deals, it's just the math. If you take like a high, medium, and low across 13 different sets of numbers, I mean, you're in the, I don't even know, hundreds of thousands of rows of, we'll call it tens of thousands of rows of tabs or scenarios or tabs. So if you can imagine a spreadsheet that's just got, 20,000 tabs for every deal, that's what ours look like from a data perspective. But then we kind of set some filters to kind of hone in on what is our approved outcome, maybe our high, medium, low. So we do simplify it, but we have the ability to flex quickly or stress test it. And that's kind of a lot.
No, I can totally relate to having a spreadsheet with a bajillion tabs on it. And something else that I'm guilty of is just creating another column. So, I've got one column of analysis, and then I'll just create another column with slightly different variables and a different scenario. And then to stress test it, I'll create another column, and it just keeps going like that. And like you said, you can go to hundreds of thousands of different scenarios, and you can only do so much, and you can only run so many different scenarios. So visually on your dashboard, what does it look like if you're analyzing a new deal? And you talked about kind of low, medium, high, kind of low likelihood, likely, best case scenario, and you're looking at it visually. What are you looking at?
That's great. Well, a lot of them are bar charts. I think bar charts are pretty easy to see in terms of scaling up and down right next to each other. But we have a fair number of bar charts with like lines. So line would be the benchmark, like debt service coverage ratio. The bank says they want 1.25 and we're at 1.4. Cool. Quickly know, or we're under. Oh, sorry, guys, this isn't going to work. We have, I'd say we do some pies, just lots of bar charts, I'd say, that are useful. And you can think about them comparing these, if you change the variables, how do they compare to each other? Or we have this like scenario. So it's light industrial property. Maybe I'll take this a little more practical. We just, there was an asking price for the property, about $13 million. And then there was sellers provided P&L or revenue and expenses for the last 3 years. So there was a seller provided actuals and their price. So we entered that, and we got our cap rates and returns, and we wanted to make a lower price, right? Because with the debt where it's at, it didn't meet debt service coverage ratios. It didn't even hardly cash flow positive. It was really out of context of the current capital market. So we came in and made an offer of $8.6 million. And we also included a renovation cost that we said we think we need to do. And so we told, we need to get this cap rate up, seller. So we showed them, here's our offer and here's where we need to be with our cap rate and our cash on cash return. So that was kind of like what they're looking at. But in the background, we have this other scenario called, we think we can raise the rates. We think the pricing can go up, and it's not on triple net right now. It's a modified gross. So we think we can convert this to triple net. And what if we did these two things with the same debt? What would our returns be? So I call this a stabilized projection. Well, we had a stabilized projection based on our offer, and then they countered us. So we had now sellers counter offer, and we're like, well, how does the projections look for them? And we ended up making a buyer's counter offer, which we heard might get accepted. So you have these different views that we want to hold on to for a period of time. We want to be able to talk about them, whether that's with our bank or with internally. At some point, they become less interesting when you get an offer accepted. It's like, I don't really care what those counter offers were, but now I'm going to go in and review, the leases and look at different, lease outcomes or rental rate outcomes, or talk to different lenders. And so that's how it kind of evolves. And we use them strategically for different discussions.
Talk to someone who is using Excel or something like it and has a bajillion tabs and knows they can do better with underwriting. They can do a better pro forma, maybe through a dashboard like you have, but they're just intimidated. They don't know where to start. What advice do you have for this person who wants to transition into something more professional, but doesn't know where to start?
Gosh, that's a great question. There is a lot you can do in Excel, believe it or not, if you think of it as a database, separate from a reporting. So, well, actually, Excel's doing three things for a lot of people. It's collecting the data, like with a form, I entered new data. It's running a calculation, and then it's presenting an output. So I would start breaking that up in your mind. I'm doing 3 different things. And then as such, redesign your spreadsheets accordingly. So you want to start thinking about my reporting. I'll do all my reporting on one tab, let's say. So my reporting is on one tab. And then my data input is on another tab. And possibly my calculations is on another tab. So if you start thinking about that way, then you don't have a different spreadsheet for every deal. And that's the big change for most people. A deal is a spreadsheet. I'm just going to copy it, right? Copy, paste. The problem is you have no ability to develop your process. This is like, I don't know, if you're building cars, it's like building one car by hand, not actually a factory. So most of us are rebuilding their performance. And I'm not saying it's, some people love their performance. They say it doesn't need to get rebuilt. But I would say is there are more, kind of back to my original thing, there's more people that can get involved either in, well, a lot of people control their spreadsheets. Like, don't touch my spreadsheet. It's really good. So that process either gets isolated, so it's very limited involvement, or it doesn't get better. So the opportunity is to involve more people in spreadsheets and have more people develop them. And this becomes more organic, growing process, more like you would think of a more valuable thing. So I think that's rethink your spreadsheet. So if you're in a spreadsheet thinking, boy, I'm doing data entry, I'm doing a calculation, I'm doing a report, and challenge yourself to go report tab, maybe build a chart or 2, data form, or there might be a few data tabs, and then my calculations is on a separate tab. And that will change how you start thinking about data. And my first income property pro forma was on a single file, Excel file. It probably had 10, 12 tabs. And it wasn't the most scalable, but it altered my path and it led to what I'm doing now.
How do you view qualitative information? With your dashboard, it's putting in all these numbers and spitting out your nice charts and graphs. But when I'm looking at a deal, there's this qualitative side. For lack of a better phrase, I think of it as the pain in the butt factor with a certain deal. So if it's like when I was doing single family homes, if it was, a house built in the 30s, I know the walls are going to be plaster. That adds to the pain in the butt factor versus a house built in the 50s or more recent is going to be drywall. That's easier to work with. There are parts of a deal that are hard or difficult or maybe impossible to quantify, whether it is that pain in the butt factor or management. I love single tenant properties because there's basically zero management to take care of versus a 5 or 10 tenant property. There's much more management. And so you being a very analytical thinker, how do you take into account those other factors that are difficult to quantify?
It's a good question. I think so. I'm not going to claim to be a master at this, and I won't take off my expert hat and just say, ideally, this is how it goes. But I would like to think that is the great challenge of business once the numbers are organized, and I would like to spend more time on that. So ideally, we devote more time to the qualitative than to the quantitative because we've cleared up the quantitative. And I think a lot of people, it's flipped. They spend a lot of time on the qualitative and they don't get to that quantitative because they ran out of time, like their due diligence time or their meeting time or whatever. So ideally, we spend more time on that and just stay curious, interested in learning. Because at times there are quantitative ways to pull that in. It's just not really focused in on it. But let's just say you can't. Spending the time on it is helpful. And then I think when it comes to business qualitative stuff, a lot of people think about opportunities and I don't know. I tend to want to focus on problems. I think people look at stuff and go, "Oh man, gosh, I don't know if I want that problem. I don't know if it's just, gosh, I've been feeling there's, everyone wants a perfect deal, but it doesn't exist." And so I tend to think like, what is the problem? What is the challenge? And is this the kind of problem challenge I want? So the emotional piece, and they're different for everybody. Everyone has so I try to get out of the perfect deal and into the problematic deal and embrace the problem or the challenge. And that helps me maybe deal with some of the undefinables as like, oh yeah, there was this bucket of things that I couldn't figure out, but I wanted it. It could be an asset type or it could be a location. Um, so does that help?
Yeah. And Jason, with all of your knowledge and expertise, I think it's in demand. Do you do consulting work for other operators, or are you strictly doing this for yourself?
Currently, I'm just doing it for myself. I did a brief swing in about 2018. I was a home builder at the time, and I started up a little consulting company, and I went to some home builders to try to sell them this, and I was convinced it was going to be useful, but the industry was so slow to adopt technology. I went to the National Builder Show. I had a booth. I went to some trade shows, and I was working so hard to get like a $10,000 or $20,000 consulting contract, so hard. And I was like, what the heck? I could just go build a storage unit and make $2 or $3 or $4 million. Like this whole notion of walking over dollars to get to pennies. That's what I was doing. And it was nothing to do with my passion or joy, but I did get one contract. We got hired by, I got a couple. We got hired by Clayton Homes, which was Warren Buffett's companies. And they, at the time, were buying stick-built companies and consolidating them. And so they had this process. Everyone had different accounting systems. And so once a month, you'd fill out this spreadsheet, like massive companies, like $100, $2 million a year companies, fill out a spreadsheet, email it to corporate, and they would like somehow squeeze it together. And I was like, hey guys, why don't you just pull the data out of their accounting system and map it? And you could have it look every day if you wanted, but more importantly, no hands are going to touch this thing. Nobody's going to make a mistake or manipulate it. It'll be more like accurate. So we helped them go through that. But so generally I'm not, but I enjoy talking about it. And I think right now I want to use the knowledge to create relationships. My dream is to find, an LP or two that likes this, or other operators that want to share knowledge like you and say, hey, interesting. I know about industrial, you know about data. Let's share knowledge. So that's why I'm on the podcast.
And as we head towards the tail end of our conversation, Jason, is there anything that you feel like is crucial that you'd like to share about data and your work with it that we haven't talked about yet?
So I think AI is a really fascinating discussion right now for a lot of people. They're somewhere between entertained and like extremely scared. Like, is this thing going to wipe me out, or is this going to be my best friend? They don't quite know. And I like to think, so my encouragement for people, it's not like you're using AI or not. Like, do you use AI or not? I would look at this as like, how automated is your business? On a scale of 1 to 10, how automated? What are you doing this year to automate things? And so what I would focus on is not necessarily trying to solve AI or figure out AI, but how to automate things. That is a light form of AI or automate. I think of automation as some sort of, or AI as a form of automation. So I would ask the question, what can I automate now? And so here's the flip side of this is, what you don't automate now is your future weakness. So what's going to take you out as a business or an investor? It's the stuff that's done manually. Why? Either because you're going to be too slow or error prone or too expensive. So automation brings down costs, picks up time, makes you competitive. So that's, I wouldn't be scared so much of AI, but all your manual processes, and then just invest in automation every way, shape, and form you can, and know that that's your kind of alignment with the future.
Yeah, I think it goes back to kind of the messy middle, those repeatable tasks that we were talking about with data and inputting data, the stuff that you don't have to be doing. I am trying to get better with that and dabbling in some things with myself to cut out some of those repetitive, mundane tasks that I don't especially enjoy doing. That is really easy to automate and can, in some cases, be done in seconds. And so I think that's great advice.
And I'll also say, focus on the little things first. So start little, build momentum. Don't try to tackle a whale. Most people will avoid the little things, focused on the whale. Just do the little things, build momentum, build your confidence, build your knowledge, and let it grow. But it's the little things over time regarding automation that pay off, and not trying to go slaw the saber-toothed tiger one New Year's Day morning.
Yeah. Jason, we're getting towards the tail end of our conversation. I have a few final questions that I'd like to ask you. They're designed to be kind of quick, rapid fire questions, but if you've got a great story or a great extended response, feel free to take as much time as you want. If you could 10x one part of your business, what would it be and why? This could be a part of your business that is the most lucrative, that you enjoy the most, that's the most passive, that brings you the most joy.
I'm really enjoying building the software. How about this? Our portal. Okay, here's our portal. I want more people to see our data and use our data. We're working on trying to figure out how to get it out there and consumed. And that's all of our, direct lenders, future partners, trade. I want to expose our work to more people and see what happens.
What's the best deal that you've ever done?
Gosh, I'm pretty happy with when I closed last June. We entitled a self-storage site near our town. I had about 900,000 into it with costs and entitlements, and sold it shovel ready for about 3.6 million. And what I was thrilled about it is that we took it through the gauntlet of land use planning or entitlements. I actually went through an appeal. And I think it's the scariest part of development or real estate. And we did it without debt. So really, we kind of proved our value. I think I'm a developer at heart. I'm not so much a long-term operator. So we reckon if real estate value is an S curve, like we nailed the upslope of that S, and our buyer is an operator and they wanted to get in the market and they will maximize the tail. But I was really happy at nailing the S, and it was the best deal of my life from a margin, timing. Yeah. And
what's your biggest lesson from that deal?
I think I'm learning to not try to be everything and do everything. And part of it's the timing of my career with family and kids, but part of it's, maybe what I've figured out that I'm good at is knowing what I'm good at and sticking with it. And so I think this, it's emphasized I'm good at it. It's confirmed I generally like it, and it's a service needed or wanted. And I want to stay in that lane. My goal is not to be huge and massive, but to be in size, but to be very efficient and very needed.
Jason, what's the worst deal you've done?
Worst deal? Well, I'm actually trying to sell it right now. I got self-serve car washes. I made a stint in self-serve car washes before COVID. I bought one near my house. It actually worked out great, but I decided to expand it into other markets. And we set up an opportunity zone fund, and we kind of found two sites in opportunity zones, one in Southern California and one in Texas. and I'm not sure which is worse, probably one in Southern California, but we bought a self-serve car wash down there and hit COVID and got crushed with crime. And I totally did not factor in crime to a real estate pro forma, but we had everything you could think of when it comes to gangs. And anyway, my goal is to stay out of cash businesses in high crime ridden areas.
That sounds like the lesson, but was there another lesson that you got from that, or was that it?
I think I let tax. So it was an opportunity zone play. It was my first go at it. I let the tax strategy drive the deal.
Mm-hmm.
That was the business lesson. I've learned it's best to let the business strategy be what it is, and the taxes be secondary. I know there's a great pride in not paying taxes, but the best way to not pay taxes is to lose money, or the most common way to not pay taxes is to lose money. So we consider tax strategy, but we go out to generate a good business venture, a good profit, and I welcome paying lots of taxes over my career.
Finally, is there a book, podcast, YouTube channel, or other resource that has been helpful to you that you'd recommend to other people?
Boy, this is going to be totally not data. So you're going to be like, what? Why did you say this? We are reading the book, my staff and I, the book, How to Win Friends and Influence People right now. And I read it about 20 years ago, and I learned a few things, but it is altering right now the way we do everything. And this is more in the qualitative side of things. So there's no data to it, really. It's about remembering people's names. It's about smiling. It's about not arguing. It's about learning about people, getting people to say yes. It's fabulous. It's just fabulous. It's actually making me a better husband. Probably the biggest change is husband and dad, like letting go of being right and not arguing with my wife or kids ever. It's a game changer. But it also helps with employees and even various sellers. We're letting go of negotiation has to be an argument. Like, why? Why can't negotiation be like something that the seller wants to do with me? So that's a great book. It's classic, and I think everyone should read it once a year.
I read the book for the first time earlier this year, and I had the exact same takeaways that you did. It was just a total mind shift for me. It's a fantastic book. Terrible title. I always felt like the title was a little icky or arrogant, and so I resisted reading it, but it was finally recommended to me enough times, and I did finally read it, and I totally agree with you that it should be a regular read for almost anyone that works with other human beings on a day-to-day basis. It's a fantastic book, How to Win Friends and Influence People by Dale Carnegie. Finally, Jason, if listeners want to connect with you, learn more about you, where would you like to send people?
Yes, I'm on LinkedIn. You can find me. My company is Signal Ventures. I don't know my link or anything, but I'm friends with Jonathan. I probably can, I don't know how that works actually in LinkedIn, but you can find me on LinkedIn.
The link to Signal Ventures is in the show notes.
There you go.
You've got a great website. Jason's been published in several industry publications. The links for those articles are on his website. Jason, this has been a great conversation. We originally connected at a conference in Southern California. We went for a memorable run on the coast, even did an ocean plunge. And so really glad to connect with you again here and catch up with you. Thank you so much for joining me.
Thanks for having me.
Listeners, if you enjoyed this conversation, reach out to either one of us. We love talking about commercial real estate, and we would love to connect with you. Thank you so much for listening. Until next time, take care.